Hi, this is Tom Alexander with Alexander Trading, and I want to uh, go over a potential trade setup, and the context. And context is most important anytime you are considering a trade in any time frame. On my screen, you can see basically three charts. This is a 30-minute bar chart of the December 2016 Australian dollar. This is the 5-minute chart of the same contract, and below, and perhaps most importantly, this is the daily chart of this contract. So and I use these three charts. My 5-minute chart is sort of to fine-tune execution, money management, adding to contracts, things like that I'll discuss in future videos. But when I'm considering a trade, there are two places that I immediately want to look. I want to see if there's a setup on the 30-minute chart. And we trade from balance areas. Again, that's a topic for another conversation that I'll be sharing with you at some point in time. But right now, this is more about context than anything else. So if I come in during the trading day, the early morning, I can see the Australian dollar is in a clear migration down, migration of value. We have these most of the wide range bars, the conviction bars, are to the downside. We have little pockets of balance, but the Canadian dollar quickly retraced. So if I come in somewhere, in this general area in here, and I'm looking to trade the Canadian dollar, now you can see when I draw these trend lines, the trend line from this chart is drawn on the 5-minute chart. If I were to draw one on the 5-minute chart, it would draw one on the 30-minute chart, so to give you a frame of reference. But if I come in, it's clear on the 30-minute chart that the trend is down. Now, if I go to my daily chart, which gives me my context, here those little, you can barely see the trend lines here. But you can see the Canadian dollar at the point in time that I come in to trade is already in a relatively wide range down. So the context of this market is that it is strongly down, but you really haven't had a whole lot of retracement. And if I look at what is a typical wide range for the Australian dollar, this might be pushing the limit. So that gives me context for what I want to be doing, how I want to be doing it, how much room I'm going to give any position. One thing I don't want to do, it's just wrong to try, based on the information we have on the screen, to try and buy this market. The trend is definitively lower. So the question is always expectancy. What do I have to risk to get a multiple of the risk in terms of potential return? So if I go short in this area and I have to risk, say, back to above the 74.40 level here, well, am I going to get 2-to-1 down here at a minimum? Is that an expectation? That might be pushing reasonableness on a day like today. So that might not be a good trade. So even though the Australian dollar is going lower and the benefit of the doubt has to be given to the downside, I have to evaluate the trades based on probabilities and expectancy, as opposed to saying, yeah, well, it's going down, so I'm just going to short it here and I'm going to risk it here. Well, over time, that's not necessarily a great trade, because you're not sure of how much downside potential you have in the Australian dollar. Now, again, the Australian dollar could collapse here, but that's not the highest probability event based on past history. And again, I certainly don't want to be buying the Australian dollar, because I really don't know where to put my stop, and I don't know what the potential is. The Australian dollar may very well, for the next few hours, and I'm recording this in real time, the Australian dollar very well may build some sort of a balance area and just go into a complete chop fest between these two areas. And if I had to guess a scenario, that's probably the more likely. So when I come in and look at this contract, I can see what's going on, and then I can make an evaluation. And I can know what's going on without seeing a trade opportunity. As a matter of fact, that's part of the benefit of using the methodology, auction market principles, to evaluate markets and to determine trade location. Hope you find this helpful. Much more will be coming.